All right, welcome to AI Explains ICT. In this video, we are digging deep into the daily trading routine, straight from ICT's core content, Month 9, Episode 8. You're definitely going to want to grab a pen and paper for this one, because this is the professional, repeatable process you should be using every single trading day.
So let me ask you something. Does your trading day ever feel, well, just chaotic? You know the feeling, right? One minute you're chasing price higher, the next you're chasing it back down. By the end of the day, you're just exhausted and your account has taken a hit.
If any of that sounds familiar, then you are in exactly the right place. See, professional trading isn't about reacting or guessing. It's about having a systematic, repeatable process. This video is designed to give you that exact structure, helping you turn that chaos into a calm, methodical routine.
Okay, let's get into it. The whole routine starts from the top down. Before you even glance at a specific pair or think about an entry, we have to understand the big picture. We need to know the macro environment we're playing in. So, step 1. The very first thing you do, and I mean every single day, no exceptions, is you check the economic calendar. We're on the lookout for any high and medium impact news events. These are the potential landmines and opportunities for the day. Now, here's what's really important. We aren't just looking at any news. We're specifically hunting for news events that land right inside the London or New York kill zones. Why? Because that's where the volume is. That's where the action happens. Just like ICT points out here, there's a Euro news event at 3 a.m. That's smack dab in the middle of the London Open. That immediately tells us, hey, pay attention to the Euro around 3 a.m. today. Okay, so we've got our potential time and pair on the radar. Now we head to the charts. But, and this is so important, we don't start with the Euro, we start with the US dollar index. You have to think of the dollar as the heartbeat of the entire Forex market. Understanding where it's likely headed is absolutely critical before we do anything else. So, how do we analyze the dollar properly? Well, we need a framework. This is where a concept called IPDA data ranges comes into play. IPDA stands for Interbank Price Delivery Algorithm. All you really need to know is that these look-back periods of 20, 40, and 60 days are how we frame the market the way the algorithm sees it. And this is what it actually looks like on a chart. It's not just theory. By marking the highs and lows of the last 20, 40, and 60 days, we create a very clear playing field. This whole structure is designed to answer one simple question. Is the price currently expensive, what we call a premium, or is it cheap, what we call a discount? Now, for what we're doing, day trading, we're really zeroing in on that most recent 20-day range. Inside that range, we mark all the key institutional levels, the PD arrays. Above the current price, we have our premium arrays, which act as resistance. And below the current price, we have our discount arrays, which act as support. This whole exercise tells us exactly where we stand. Okay, so here's where it gets really interesting. For the dollar index, the big picture, the institutional order flow is bearish. It's been trending down. But right now, within that 20-day range, it's trading at a deep discount. So you've got this conflict, right? The long-term trend is down, but its short-term price is cheap, which suggests we could see a pop higher before it continues down. Now that we have a solid bias for the dollar, what do you think we do next? You got it. We apply the exact same analytical framework to our target pair, the Euro-USD. The process is identical. And look at that. It's the same process, just on a different chart. We've marked the same 20, 40, and 60-day IPDA ranges. This consistency is everything. This isn't about finding a new trick every day. It's about applying the same structured analysis over and over again. And no surprise here, what do we find? The perfect mirror image of the dollar. The institutional order flow for the euro is bullish. It's been trending up, but its current position is way up in a premium. This lines up perfectly with our dollar analysis. If the dollar is cheap and could rally, it makes sense that the euro is expensive and could drop. So, big picture, check. Directional bias, check. Now it's time to get tactical. We're going to drill down from this daily view into the lower time frames to really pinpoint our entry zones and build out a few trade scenarios for the day. So let's drop down to the 4-hour chart. Things start getting a lot clearer here. We know the daily trend is bullish, but we also know the market is expensive, up in a premium. So we start asking the right questions, like why would price need to go down if the trend is up? And the answer, almost always, is liquidity. We look for old lows where we know sell stops are resting. The market wants to push down there to grab those orders at a cheaper price. And if we drill down even further to the 60-minute chart, it becomes crystal clear. We can see very specific targets now. You see those equal lows? That's a massive pool of liquidity. And right below it, you have a bullish order block and a fair value gap. When you get multiple things lining up in one area like this, it acts like a powerful magnet for price.
So, after all that analysis, here's the game plan we can build. Our main idea is that price will drop to that zone right below the equal lows. That becomes our A-plus entry zone. We'll watch for price to hit that level on a 15-minute chart right around that 3 a.m. news event we spotted earlier. And this is huge. We have a contingency plan. If that level breaks, our idea is wrong, and we know exactly where price is probably headed next.
You know, having this whole analytical process is amazing, but honestly, it's only half the battle. To actually execute this day in and day out with discipline, well, that requires a very specific mindset. So this is it. This is your daily checklist. The whole thing, start to finish. This is what takes the emotion, the gut feeling, the guesswork out of your trading. It's a systematic, methodical process you can rely on. And I really want you to hear this. This routine is not about having a crystal ball. You are not going to be right every single time. It's about putting the odds in your favor. It's about consistently operating inside a framework that gives you an edge, so that over 100 trades, you come out profitable. This quote from ICT just nails it. A typical trader sees a loss and feels defeated. A professional sees it completely differently. A loss is not a defeat. It's a premium you pay for information, for a deeper insight into the market. Think about it. When your setup fails, the market is giving you immediate, unfiltered feedback. It's tipping its hand. It's screaming at you. Nope, not going there. That tells you where it is likely going next. That information is pure gold, and it allows you to adapt and re-engage with even more clarity. Hey, if you got some value out of this breakdown, do me a favor and hit that like button and subscribe to the channel for more. And if you have any questions at all about this routine, just drop them in the comments below, and a real human will get back to you. Safe trading out there.